Welcome to the Authentically Successful Show. I'm Carol Schultz, founder and CEO of Vertical Elevation, a talent equity and leadership coaching and advisory firm. Listen at the end of the show for information about becoming my next guest on one of the most important podcasts for building thriving companies. Here we go. Welcome to the show. Today, with me from London is Henri Winand, CEO and co-founder of AkinovA's. And Henri, thank you for joining me today.
Carol, it's a pleasure to be here.
Yeah, it's a pleasure to have you. And I appreciate you doing this so late on a Friday afternoon.
Well, it's the best interviews are late in the evening for me.
Good. Tell us a little bit about what AkinovA's does at a high level.
So AkinovA's has been created to open up the insurance opportunities as an asset class for investors to go straight into. So whether it's insurance risk, reinsurance risk, insurance-linked securities, if you want to transfer and trade it, that's the venue, the regulated venue in which to do that.
Got it. And you are VC funded, yeah?
So we are backed by a mixture. To make a marketplace of this nature work, you need to get backing from the insurance industry. So we have insurance and reinsurance backers, Hiscox, MS&AD. You need to have data animation. So we have investors from the data and analytics landscape as well.
Right.
We have VCs from the East Coast, West Coast of the US, from Japan, and from Israel. And we also have capital markets backing as well. And that's
I'm sorry, go on.
That's the key. It's you then have capital markets and insurance, and that's both sides of my marketplace.
And you and your co-founder, Jean-Michel Paul, founded the company in early 2017, yes? And,
that's right.
and you've taken about $4.1 million in funding since August of 2018 through a seed and an A round. Although knowing you, and I've known you now for a couple of years, I'm gonna suspect that maybe you're either close to or have already done something with a B round or an A+ round.
So we've done a number of things, which means that we're well capitalized, but we haven't announced it. So I won't say much more than that.
Got it. So tell me a little bit about why you chose to go the VC route rather than bootstrapping your company.
So we did both, actually, because we co-founded the company in early 2017. And we had a piece of paper that we went to check with a few future clients to say, hey, this is on one page, this is what we're going to do. And people thought, wow, if that's what you're going to do, get on with it. But you need to know how you're going to execute, right? So Jean-Michel and I bootstrapped by financing ourselves in a tiny little team. So we had a CTO, we had a commercial, we had a lawyer coming in, and we bootstrapped that for about a year. By that time, we understood how to execute, and that's when we took some external capital in August 18. So the real cracking on with it at scale and getting on regulatory and everything else that we needed to do started in August 18. But the pre-market study is bootstrapping. A lot of entrepreneurs will just go and build a whole load of tech and blah, 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 etc. And then you arrive, ta-da, and then the clients are saying, well, that's not really what I want, right? So we wanted to understand how to execute.
Yeah, very smart. Very, very smart. And you make a really good point. People will build a technology without really understanding the need for it.
That's often the problem. Looking for a solution is the right way. Solution looking for a problem, less so.
Exactly. So what do you think, you've talked a little bit about taking funding from, really globally and from different types of companies, from insurance to venture capital. What do you think the attraction is about AkinovA's from a funding standpoint?
Of course, it's the expectation of great return. It's marketplaces have high operational leverage, extremely high gross margin, so good net margin. So cash generation is the place to be. The challenge with the marketplace, of course, it's two-sided. As a matter of fact, I would say it's even three-sided. The clients we serve are the insured on one side. It can be a corporate, they can be an insurance company, they can be a reinsurance company, any one of those, and funds for that matter. On the other side, of course, what I need is matching the supply to the demand. So it's like when you launch, let's say, Airbnb, You're going to have some people who want to go, let's say, to Colorado to take a location, but no rooms in Colorado. What do you do, right? Or the other way around, you have rooms in Colorado, but nobody wants to go there. What do you do? So it's matching supply and demand, which makes it, whilst marketplaces tend to do winners takes most, not all, because there will be several marketplaces. You need to understand that matching supply and demand is really the game, and that takes a little time. So the attractiveness is that the returns and the margins are fantastic for marketplace, and once you're in there for a long time. The downside, it takes a little bit more time to get there.
Yeah, very good. What would you say is the biggest problem you solve for your clients?
So today in a hard market, we allow insured, we enable insured and brokers to do deals. So when you go to the current markets, you find out just risks that you cannot place. So if you're a broker today and you've been going around the markets, the traditional markets, the alternative capital markets, but this fear of people who exist, and you're there, you can't serve your insured and your clients. A, you're not going to make money, and B, your insured is going to be pretty miserable because they can't cover the rest they want to cover with a contingent capital solution. So we come in, we have a customer success team, we have the technology to create the deals and to create deals and make deals happen. So if you're a broker with a retailer wholesale, and there are some deals you can't do today, come to us. We'll make sure that they happen. We don't have 100% strike rate, but we have some very exciting deals going through the platform. The other side, the investors have access to deal flow that they don't necessarily see today. So both sides of the equation win. So the insured and their broker can do more deal and make money or cover their risk. And the other side, as an investor, you see deal flow that today you don't see. So that's what we do today.
Yeah, and Akinova is really sort of at the intersection of insurtech and fintech, would you say?
Yeah, that I think it's actually a very perceptive and accurate representation. We are regulated. What we saw is for this industry to truly grow more than the linear trend on which we are today. If you look at the insurance, it's largely linear with GDP. So it's one-to-one with GDP, right? So you do 1-2% growth. Everybody's happy when you have a bit more GWP growth. And then everybody's concerned about the lost adjusted expenses and all that stuff. To really transform the industry, we need to be able to enter classes of risk which today people don't think they can underwrite. And so I'll give you an example. If you want to do cyber at scale, if you want to do intangibles at scale, if you want to do even credits, things without dislocation and lots of movements, you need to be at the intersection between capital markets and insurance, because capital markets values the assets, the intangible assets the whole day long. Insurance tries to put a wrapper of a length of, let's say, a year around the risk. But if you can't price it at the intersection between the two, you will not be able to do intangibles. You will not be able to do contingent business interruption at scale for logistic disruption, etc. And so having done the regulatory framework that is insurance risk meets capital directly, we've had to push insurance regulatory framework, capital markets into framework into one new thing called the insurance marketplace. And that's what we've spent 2 years to do. And we received our full regulatory approval in January of this year.
Yeah, that's really great. Tell me a little bit about the journey to where you are today, and what had you say, you know what, it's time to start a company.
Well, it's not my first one. So that's the first one to think about.
It's not your first one that you founded?
It's the first one where I am generally the founder. With or co-founder in this particular instance.
And that's what I'm getting after.
Before that, it was either an entrepreneur came up and I made a seed investment, or the company in which I was decided to make a seed investment, and then we basically gone with it. Why? Because I like to, what really floats my boat is meet technology, a bit of tech, meets a big market requirements, and where a regulatory moat with a bit of technology moat will give you the ability to execute at scale. So big problem, bit of tech, some regs, and that gives you the head start that you need to go and execute your plan. So that's really what I like. Why now? I'm just now in my early 50s. And I think I've got one more, if not two, potentially three more ventures.
Right.
Why not doing? I've done in the past some hardware ventures in the energy space, some taxi ventures in the transportation space, new energy, in-flight entertainment, stuff with hardware. And if you go more to the software, which is going back to my roots, the working capital intensity is a lot less. You don't need to have a factory. Right. And the business model flexibility you've got allows you to execute. So to be able to get to an exit, within a 5 to 10 year horizon is far more doable with less hardware than more hardware. That's why I wanted to do another one. And this time had to be in synthetic products. Insurance is in synthetic. And in a space where it was about execution around software.
What do you mean when you say that insurance is synthetic?
Well, it's a synthetic product, isn't it? It's like a banknote where I basically give you $5, but actually it's not $5. It's a promise of if something happens to you, you're going to get paid, or you may get paid depending on how the contract is written, right? So by definition, it's a synthetic product. And it's based on credit rating. It's based on analytics of what's it's worth, what's it's truly worth, and all the things that we know about capital management.
Yeah, very interesting. So prior to founding Akinova, you spent 10 years with Intelligent Energy, and you were their CEO. How do you feel that your background has prepared you for what you're doing right now?
Well, it included building a business from 30 people to 500 people, from 2 countries to JVs in Japan, business in Singapore, India, West Coast US, and doing business globally and doing licensing and making stuff in various countries. So the scale up from typically your tribe up to about 25 to 30 employees. From 30 to 500, it's a true scale up, and you have to think about FX and all that. So scale up is an important thing. Also, we took the company from about $250,000, $100,000 a year of revenues to north of 100 million.
Yeah, very great.
So again, that's a scale up. We did an IPO. So again, the capital raises through my career in dollar term, I probably raised about $250 to $300 million for companies that I've had the privilege to serve. And then also the post listing, the ups and downs, all these things that you go from a teenager as a company to now you have to behave like a grown up, and you learn a lot by making mistakes every day. And so my mantra is hopefully I'm not too stupid when I wake up in the morning, but I'm far less stupid by the end of the day because I've learned. And you learn by making mistakes as well as by having successes, probably more from mistakes than successes.
Very, very good. You took the words right out of my mouth, because I've had this conversation with every founder. Exactly, talking about the mistakes you've made, and where do you learn more from, your mistakes or your successes? It's typically your mistakes, right? It's not that you can't learn from your successes, but the opportunities to learn from your mistakes so that you don't make them again, right?
I think that's one of the biggest mistakes I ever made were mostly around people. So the wrong selection of people, the poor onboarding, whatever it might be. And I'm an optimist. I mean, most entrepreneurs are optimists, right?
That's right.
Because who would want to have odds of 1 in 10 to 1 in 100? 1 in 10 to have a reasonable business, 1 in 100 to have a very good business.
Great success, sure.
So you have to be an optimist, and it very often when you then interview people, you put onto the third party, the interviewee or your potential business partner. You put some positive attributes, and then you forget to think about what the questions are. And there are typically 2 questions I always ask. One is, tell me, if it's 5 o'clock in the morning and it's raining horizontally and it's freezing, why do you get out of bed? And that generally is the question that I ask people. So I want to understand what makes them tick.
Yeah, sure.
And the other one is give me a horror story in your career. And what I look for then is what the person has learned. Not the horror story per se, but and I learned this and I learned that and this and fantastic. I'd rather hire someone who's made mistakes and learned from it as opposed to just a lucky general is good.
Right.
But you want to have someone who's actually, you know what, I've got business skills.
Right. Do you also, when you're interviewing, since you brought that up, do you look at when somebody tells you about their mistakes, how they've been accountable for those?
Yes, I mean, what you want to do is, look, when you make a mistake, you're not running to the hills. Ultimately, buck stop with you, and you take accountability for what it is.
That's right.
And I mean, that's the only way you can go and make it right. So what I look for is, okay, I made a horrific mistake, and usually what I then try to tease out the conversation is, what did you learn, and how did you make the situation better than when it started? And some people will just say it just was not retrievable, but I was honest and I just said it as it was. And I've learned that, don't do this again. Okay.
Yeah. I mean, listen, it's happened to all of us, right? It's happened to me, certainly, where I've looked and I thought, well, I just had no control over the outcome of this, but what can I still learn so that, if when this happens again, I can handle it differently for a different outcome.
Yeah. I mean, one of the reasons why I went into AkinovA's is because I met my co-founder through my brother. And I had promised my family that I would take 6 months off. And I did. I mean, in fairness, it was 2 days in that I met my co-founder, and then I couldn't get the idea out of my mind. I went to do some checking, but I was still there taking time off.
Sure.
And one thing that you learn in life, that time is the most important currency you've got. And that was brought home to me that 3 months after the IPO of business, so Intelligent Energy, my daughter was 7, passed away unexpectedly, and I just arrived in Japan for a bunch of meetings, and so we have a son who's phenomenal now. He's towering over me, 6'3". He's 17-year-old, and a fantastic wife who's also an entrepreneur, and so these lessons are things that how people react to those, and how people then learn what really is the essence. And to me, time is that's the only thing that we haven't quite worked out, how to do time travel. So by definition, you've only got a certain amount. You don't know when it finishes, and use it well. And then what keeps me turned on is if you can improve things. So if you started your life and you finish your life and you've had to improve things, which is really the note of an entrepreneur, then you've done something right.
Yeah.
And some people invest in their family. The next generation is the improvement. Some people invest that and other things, and that's fine. What I don't want is have just gone through life and not given my best shot. And by doing that, you find, the road less traveled has some really exciting things in there, which is you can shape. You'll need luck. You need all the stuff you're going to get, but you can shape where you're deploying your time. And that to me is really the excitement.
Yeah, that's really wonderful. I mean, you're very, very self-aware, and it's really great for me to hear that, because not all founders are. Do you have competitors in the market at this point? And what challenges would you say that you're having, or you and your competitors are facing?
Look, if you don't have any competitors, it's bad news, because you could be drinking your own bathwater and thinking that you have a fantastic thing, but nobody really wants it. So competition is good because it shows that others are mining the same idea.
Good. And
also it keeps you honest, because you're always there thinking, have we missed something? Do we need to go faster? Right? So, and you really great entrepreneurs are constantly slightly schizophrenic. They're thinking, right, someone is after me, because it's true, right?
Right. Yeah.
Now, the reality is, so competition is good, and we do have some.
Yeah.
There are completely different strategies. Well, what we find is quite funny, as soon as you say marketplace, immediately people have marketplace. So you compete with X, Y, and W. They are very different strategies.
Right.
So different way of approaching the market, which is, again, is really good, because at some point one of those will succeed, and of course we
You're
bet
hoping it will be you.
us.
Right.
So what's the key challenge? The key challenge is, what we found is, so far when people talk about the electronic marketplace, risk transfer, etc., immediately the investor will ask you who's going to lose. And in most people's mind, people are talking about, is the broker is going to lose, is this or that, or someone else is going to lose. The reality is not true. If you have a proposition, which is what we have, which is about growth, and I'm Belgian, so I will always look at not just the business case, but the business cake. If you can visualize a much larger cake,
right,
people have far less tendency to argue about the slice of the cake they're going to get. So as long as your proposition is about making all the various market participants more successful faster, to be able to do new stuff, you don't need to have someone to lose, because what you do is efficiency, but you also do effectiveness. One is doing the right thing, the other one is do things right. Efficiency always leads to, eventually, you do a lot of volumes, but no money. Effectiveness means that you can do new stuff for which you can command new margins and that's our approach to life. Is we always look for, how do we increase the size of the pie, to take another metaphor, and then you can then slice the pie, because there's more for everybody to go after.
Right.
And that's where the major change is. We're not going after reducing the business broker, quite the opposite. We are there to give better terms to the insured. And how do we do that? Is because the capital efficiency is better on the other side.
Interesting.
And so you can grow the market and you can have better terms.
Got it. So who's your ideal client and what makes them ideal for you?
So at this stage is a client that has in business, you want to have, you want to sell aspirin to people who have got migraines first. So we look for the clients, the insured and the brokers just can't get their deals done. And as it happens, I'm the aspirin, right? So that's phase one. And then phase two is always sell vitamins so people can run faster. And phase two is about the market making, is about new type of products, which on the right businesses in a very different way. It's about market animation and market making. And so we are in the selling aspirins to people who have migraines at the moment phase, because hey, you're not going to argue too much. So Carol, if you come to me and you say, I've got Henri, you look like you've got a migraine, it's likely that I'll also say, how many aspirins can I buy from you, right?
Right.
So the ideal client is a client they just can't lay off their risk. It's a broker that just can't construct the structure at the back on the other side, and they look for. We've got an amazing database of about 20,000 global investors across most asset classes. Typically, an insurer will go to 200, maybe 300 different markets. So we bring these new markets to an audience that needs cover.
Very great. So how many employees do you currently have?
So gosh, we believe in semi-variable cost structures. So the core team until recently was about 7. But actually we have had some long-standing relationship with various subcontractors. So we're currently turning that into permanence. Great. I would expect the outturn towards the end of the year will be about 20.
Wonderful. And if I was an employee of yours, what might I notice from a standpoint of your culture, your company culture, and what makes it unique?
Gosh, that is a great. It's one of the most difficult answer. Very, very demanding. Very, client centric.
Good.
Very. There was the good old saying from Jack Welch: if you have your backside to your client and your face to your customer, to your boss, is the wrong way around. It should be the other way around, right?
That's right.
So very client centric. We're very thoughtful. We are a bunch of engineers and clever people, so we do tend to discuss things for a while. which I think is important to come up to a more balanced
Mhm.
outcome. Tend to listen a lot and then do stuff, because strategy without execution is what is it? Vision without execution is hallucination. So
Right.
execution is what it's all about. So very outcome focused.
Yeah. Would you say that you are building or have built, given you said core team of about 7 and you'll be at about 20 by the end of the year full time? Would you say that you have a culture of feedback? And do you know what I mean by that?
I think so, and I like to think so.
Okay.
The challenge is, of course, you don't really know until, I mean, it's until you really have the ability to scale. The feedback is a challenge, particularly more distant we are now. I mean, yesterday, for ages, I hadn't had the chance to go to and have a relaxed chat with it was a pub. We're freezing outside because you can't get in, but you could be outside. And my CTO and I could just share a pint of beer, which
Yeah.
I don't, as a Belgian, is very odd, but I don't drink a lot of beer. And we just had a good chat, and just the body language and everything else, I think is important to be able to do that.
Yeah.
I think I can be very direct in my feedback.
Good.
But you have to temper that, because one thing that we have in the industry is, frankly, gender balance is just poor.
Yep.
The company Akinova looks like a men's club.
That's exactly what I was going to ask you about that. So I'm glad you brought it up. Yeah. You don't have any women working for you, do you now?
We do, actually. We just made an offer today to a lady in the commercial team. So I'm hoping that goes through. So we have 2 women now in the commercial team. We have 1 on my advisory board. We are now, I'm pushing very hard to get a new CEO for our Bermudan operation. So yesterday we announced that Dennis Mahoney, who's well known in the industry, became the chairman of our Bermuda subsidiary, which is the operating company. So that's super exciting. And but gender imbalance is wrong for business, right? And if you look at insurance as a whole, a lot of it looks like me.
Yep.
And business-wise, it makes no sense.
Well, and more research is being done, really showing that women in leadership roles, particularly executive leadership roles, contribute directly to the bottom line.
There's just no debate. There's the ex-vice chairman of the Goldman Sachs, Kathy Matsui, I think, in Japan. She wrote a book, I think, with when she was still at Goldman. So she left a couple of months ago. It's womenomics, I think it's the way you say it, right? So economics. The bottom line is that you have better quality decision.
Yeah.
You have less of a let's all jump off that cliff, lemming-like activity, and fundamentally the problems are being looked at in a very different way. And so the decision and the outcome is usually of a high quality. And I've seen that in previous businesses. So it's something that I'm passionate about. The needle is moving, but by God, it's slow. And it shouldn't be.
And there are things you can certainly do about that. And I mean, the bottom line is yes, to bring in more diversity, but you don't want to bring somebody in just because it's diversity if they're not capable of doing the job. And that's where, I think that's where the balance lies, right? So one of my last questions, how do you typically spend your time when you're not working?
I read a lot. I read a lot of news, lateral technologies. So it kind of feels like work, but it's not. So it allows me to kind of ruminate and, you know, percolate. In business, you can do 2 things. You can go and have an espresso, 2 minutes later, you've got a strong cup of coffee, or you can have a cold brew, which is overnight, right? So that's my spare time, is when I can do the cold brew stuff, which is to percolate stuff slowly. Yeah. And best decision then come usually when you get back in espresso mode afterwards. I love to spend some time just, one of the benefits of if there's any such thing with the tragedy of COVID is I'm far more at home than I've ever been. And I get on with my wife and my son, and it's just awesome. I love cycling. So last year I did about 10,000 kilometers on the road because I could be, instead of being 5 hours and commute every day, I could do my 30 to 40K a day.
Yep.
Breathe some fresh air, it allows you to think about stuff as well as you're cycling. And I love to have a good bottle of wine with some friends. And so we've done some virtual dinners, with stuff like this, where you have people on different Zooms around the table. Yeah. And is it the same as the real stuff? Not really. But a good bottle of wine.
It'll do in the meantime.
You bet.
Right. So if there's anyone listening that is thinking, wow, this is a company I'd love to know more about, and maybe even be interested in talking to them about if they have any positions that could be a fit for what I do, how would they go about doing that?
It's super simple. They just email me, call me. All the details are on the website, www.akinova.com, AKINOVA.com.
Very wonderful. And if somebody goes to your website, is there any particular place that you would say this is a great first stop on our website to learn about us?
It's a super simple proposition on the website. So they just scroll down. And it's so good that it's been the same for about 18 months now. So we're about to change it for those. So get in now so you can see the original one, and soon there will be a new one. So if you want to see how the company started, now's the time.
Good. Well, Henri Winand, CEO and co-founder of Akinova, headquartered in London. Thank you so much for joining me today. I really appreciate it. And thank you for your time.
Carol, thank you.
Thank you for listening to Authentically Successful. If you are a successful founder or CEO who would like to be on this program, please visit verticalelevation.com/podcast/apply. If you learned something from this interview and it made a difference, please share it on LinkedIn or Twitter. You can also do a quick screenshot with your phone and text it to a friend. And if you know of someone who would be a great guest, tag them on LinkedIn or Twitter to let them know about the show and include the hashtag Authentically Successful. I love seeing your posts and great suggestions. Lastly, we are regularly putting out new episodes and content. And to make sure you don't miss any episodes, please subscribe. Your thumbs up, ratings, and reviews go a long way to help promote the show and mean a lot to me and my team. If you want to know more, go to our website, verticalelevation.com, or follow me on LinkedIn. This is Carol Schultz. Thanks again for listening, and see you next time.